Welcome back. Look at shares of Tesla down 1.5% today. Reuters reporting the company is offering discounts to some European leasing companies. Just the latest price cut from the EV maker. They cut prices as recently as last month in a number of major markets, including the U.S., China, and Germany, as they fight to hold on to market share. But my next guest says Tesla's pain could at least be one auto supplier's gain. Joining me now is Colin Langan, automotive and mobility analyst at Wells Fargo. Colin, it's good to see you again. Welcome.
Yeah, thanks for having me on.
So there's a good story to tell about BorgWarner. Let's just cut right to the chase. What is it?
Sure. I mean, we like BorgWarner for numerous reasons. So we just did a big deep dive into the China EV risk. And I think they're really one of the few auto companies that stands to benefit. About 70% of their business in China is with the locals. And we really believe that those are not only going to continue to gain share within China, we see a pretty big risk of the Chinese locals expanding around the world. We highlighted in our report there's 11 million units of excess capacity in China today. That compares to global demand of 90 million units. The Chinese just really have a strong advantage, not really in the labor cost, the hourly labor cost. Really, I think what people don't fully appreciate, it's in the R&D. They're able to churn vehicles out in 2 to 3 years versus developed market automakers that are doing it in 5 to 6 years. That's a huge advantage from a cost and a pricing standpoint.
Well, that flies in the face of those who would insist these tariffs are because China is dumping EVs. And I think in some markets they have to kind of prove that in order to levy those kinds of tariffs. Here in the U.S., I don't think we have to prove that, right? We can do it effectively, do whatever policymakers want.
Well, I think when I look at the China EV risk around the world, there's definitely the risk of the domestics that are playing in China probably continuing to lose share. They lost about 14% market share since 2020. I think that trajectory continues. But I think GM, Ford, Stellantis are all global companies. So there's risk in South America, particularly, where I think China's gaining footing. BYD is going to be opening a plant both in Mexico and Brazil. If you go to Europe, which is a market that does not have a lot of protectionism currently, you're talking about they're going to build a plant in Hungary, and we're seeing rapid pace of exports. China is now the biggest auto exporter in the world.
Well, and it's an area that, of course, completely threatens countries like Germany, like the U.S., where we've had these really critically important auto manufacturing businesses. Thank God for Tesla. But even they, it sounds like, are maybe not price competitive or competitive in other ways. So for U.S. investors, what do they do with the big automakers? Do they have to kind of stay on the sidelines while this wave of innovation plays out?
I mean, I have underweight ratings on all of the Detroit 3 and Tesla. I do think that it's a pretty tough time to be involved with the automakers. I mean, you have pricing pressure, you have EV pressures, you're forced to ramp due to regulations. And I think as you go to the midterm, the China emergence is a big risk. I mean, BYD went from 400,000 units just 3 years ago, and it's supposed to sell 3.7 million units this year. It'll be a couple 100,000 away from Ford, which is pretty remarkable and really shows how quickly these companies could be catching up to the traditional automakers.
Is there anything that the traditional automakers can do at this point?
I think one of the fundamental realities is I think they have to think about R&D and how quickly they develop and invest in their vehicles. I think they probably need to improve the refresh rates, particularly in China, but they're really going to have to think about it around the world, getting products to market faster on a faster development cycle, which is a fundamentally different way from where they've historically thought.
Yeah. Well, it's kind of a grim prognosis, honestly, and you do worry about Tesla, and the stock price reflects that as they struggle to keep up. Let's talk about one of the few winners that you do identify. We talked about BorgWarner a moment ago. The American company, are they not? Are there any others? And just how much upside could they have?
Well, I mean, for Borg, China is one of the many tailwinds that we see for BorgWarner. They are, a company that has, 15% of their sales with electric vehicles. I think they're going to see a big boom in their e-powertrain business. They're very well positioned there. I think they're going to be a top 3 to 5 supplier in some of the key growth areas. They're also trading at a discount to their historic multiples, so they're at a good valuation. They benefit from the full hybrid theme. They have a lot of, strong balance sheet where they continue to do buybacks. There's a lot of levers they could pull, so I see significant upside in the stock. And it's our top pick in the space.
All right. And I'm like a dog with a bone. I just can't let this go. So my final question is there something more that policymakers could do? The Biden administration has tried to push this EV transition, to really push the automakers in that direction, but it sounds like it's backfiring and China's already leapfrogging them. And this is going to require massive capital and still may not be economical. It reminds me a little bit of the Intel challenge as it faces other chip rivals. Granted, more of those are American-based. So how do we push U.S. automakers to catch up at this point? Is there anything we can do?
I mean, I think it's a big challenge. I think what we have to realize is that China has started 10 years ago, and so we're putting policies in place that is as if we have done all the work. So the supply chain is not ready in the developed markets, and I think you need to do is actually put in a regulatory framework that's actually a little bit easier, ease back on the requirements for electric vehicles, and give them more time to put in the grassroots framework in terms of supply chain, which is really one of the fundamental issues that make it very difficult for the traditional automakers. I think you give them that time, I think there's plenty of room for them to catch up.
Interesting. To make it easier for them to use the global supply chain to make more competitive EVs.
Yep.
Interesting. Colin, thanks so much. We appreciate it today. Thanks for your time.